Holy smokers, this ain't no dang jokers. Ladies and gentlemen, the stock market's getting very interesting now at this point in time. We have a lot to go through in this video here today. You know, if I'm recording you a morning video, a video when the market's not even closed, you know there's some drama out there. And oh, do we have some things to get into in this one here today, okay? First off, where we're going to start this video is I made I put something on X yesterday, and I don't usually make short-term calls on the stock market or stocks. But yesterday I posted on X, I said, be on the lookout for a gapping crap on Nvidia. And this was at a time period when like people are like, what? You're crazy. Like Nvidia's going up, stock's up nicely after hours. The earnings are amazing. The guidance is amazing. The conference call is amazing. And they're a guy that doesn't usually make short-term calls in the market. It's basically telling you look for a gap and crap. And sure enough, it crapped, right? What happened? Like, how did I have the confidence to go out there and say something like that? We'll speak about that in this video here today, okay? From there, I want to do a lot of stock talk. I'm going to take you through big tech, talk about the stocks I think are most interesting here. I'm going to take you through my possible buys watch list, what stocks are up next for me to buy, all that good stuff. Then I'm going to share with you also what stocks I actually bought today. I bought over $40,000 of stocks just shortly before I started recording this video here. I'll share what those stocks are, why I bought those stocks. From there, we'll go ahead and react to this video, which is very important. This is the most underrated subject in the stock market right now, is around depreciation of these chips. All these big tech companies are ordering. So important. I spoke about it extensively on the main channel last night. I want to go ahead and react to that. And then we'll react to Dalio, which has a very interesting stance. He says, we're definitely in a bubble, but that doesn't mean you should sell. That should be a very interesting one to react to. A lot to go through. I hope you guys appreciate me covering all this for you and trying to get this stuff out in a timely fashion. I appreciate y'all for joining me. Only one thing only I need from you. Just hit that little thumbs up button, that like button. That's all I need from you, okay? If you want to be subscribed here, definitely subscribe. I'm going to try to keep you guys up in the loop as all this drama unfolds here over the next few weeks, okay? Also, pinned comment down there is going to be to our massive Black Friday sale. You need this sale. It is, we're going to basically send out the first emails and text messages on Thanksgiving night, and then it'll be live all of Black Friday. And so, and then the sale will be over essentially. So that will be the pinned comment down there. Enter in your name, your email. If you want to receive it via text, we can send it over via text. We're going to have a 1-month sale and a 3-year sale. So I know there's a lot of people from a lot of different backgrounds that watch my videos. Some of you guys have your first few $1,000 invested in the market, the 1-month deal will be for you, right? Either you guys have more money than you don't know what to do with, right? And that will be, the 3-year deal might be a better option for you. You'll save more money over time, okay? We have 960 people now signed up for that sale. So I'm very excited for all you guys, and I'm sure we'll be at 2,000 plus before you know it. Just last night, right before I went to bed, I checked and we were at 777. So yeah, that was a pretty cool number. Alrighty guys, so what's going on here? Let's talk stocks, let's talk market, let's talk the best opportunities in the market. Let's talk about what's actually going on. Listen, for me to make a short-term call on a stock, I have to be pretty dang confident because I'm a long-term investor, but I've been in the market 17 years and I've seen every twist, turn, everything this market could throw at you. I've seen it. There's nothing that could really happen now that I will, like, oh, I've never seen this before. Like everything, like, crashes, corrections, time periods when you think the market should be going up and it goes down, time periods when the market's going down and you think it should be going up, like vice versa. Like when you're in this game long enough, you're going to be like, I've seen this show before. So Nvidia, they come out with the most amazing report you could possibly come out with. They destroy the revenue, EPS. The guidance is way ahead of everybody on Wall Street, even the bulls, right? Phenomenal commentary, talking about demands, insane, blah, 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 right? And yet, what does it have to show for it? It's down to 181 after hours, right? And so how do I have confidence to make a call like that? Well, a few things, right? I posted this also. I think this was even more important than to be on the lookout for the gap and crap. I said, the max pain, by the way, my X is always linked in the description if you guys ever want to follow me on there. I said the max pain for the stock market would be if Nvidia loses its gains during the trading day tomorrow or by Friday option expirations. The longs and shorts would lose, plus it would hurt bull sentiment. That was the worst thing that could happen, right? Is Nvidia could gap and crap. And many times the stock market, especially when the stock market's entering a nasty mode, which is what we've now entered, it wants to cause maximum damage out there. So basically, everybody was expecting at least a 7% move on Nvidia stock. So everybody was, buying calls, buying puts, expecting at least a 7% move. So if Nvidia doesn't move at least 7% to the downside or upside, all those people are going to get screwed in the end. They're all going to end up losing all their money on that, right? That's a max pain situation. Additionally, the bulls were so hyped up, and I was looking at X yesterday, right? And even me coming out and saying, be on the lookout for a gap and crap, people were attacking me left and right. It was insane just for saying that. And I'm like, guys, like, you know, I'm just trying to put you on some game here. Like, don't attack the guy who's trying to teach you. Like, you know, it's like somebody's trying to teach you 2 + 2, and you're like, oh, you're evil. And it's like, dude, what is going on here, right? When we're talking about maximum pain for a stock market, like the worst thing you could do right now is, the most damaging thing is have a stock like Nvidia report perfection, right? And have the stock go down. Then does that really kill bull sentiment? Because bulls are looking out there and like, if they came in with perfection and their stock goes down, what do you have to do to have your stock go up in this market, right? And you're looking at other stocks like Oracle, all of its gains that stock had, it's now lost those gains, right? Now at this point in time, it's lost everything, and now it's way lower than even before the OpenAI announcement. Amazon, that stock went up huge after earnings. It's lost everything and then some now at this point in time. This is like psychological warfare going on out there where, you know, just like damage. And everybody that, you know, was so excited about stocks only going up is like, oh boy, okay, things are kind of flipping. So that's why I made that call last night, which once again, I do not make many calls on the short term of the stock market. So if I do, it's because I'm pretty darn confident with something that's going on out there at that particular time. Okay. Now let's talk some stocks. Okay. So when we look at the Qs now at this point in time, the Qs are down 7.6%. Very important everybody understands this before we start talking about a bunch of stocks. Listen, if you've been watching my content all year, what have I been telling you this whole dang year, at least the last 6+ months? This is 2018, right? And the whole time I've explained this is just an inverse 2018. 2018, you had a small drop at the beginning of the year, huge drop at the end of the year. We're having an inverse now. We had a huge drop at the beginning of the year, a smaller drop at the end of the year. At least that's what I foresee, right? Meaning I expect the NASDAQ to go down 10 to 15% before this is all said and done. Right now we're at 7.7% roughly, right? So we're over halfway there in regards to this matter. And so this is exactly what I thought would play out, and it's playing out. The fact that people didn't see this coming, I'm like, you know, like, you should have seen this one coming if you have a lot of experience in the market. If you're brand new to the market, like I understand, like, you know, trying to understand like why the market would go down at a particular time, I get it. But if you've been in this game for a long time, you know, I think you could kind of see this one coming. But even, I'll be honest with you guys, even a lot of people that do have a lot of experience in the market, even a lot of them still didn't see this one coming. And I'm like, guys, like, everything's lining up just like 2018. We're just an inverse in terms of the size of the drop at the particular year. But I'm like, everything's lining up here. And so that's exactly what we have playing out now at this point in time. So MU, this one's sinking rapidly. This stock was touching 250. It seemed like just last week. I swear, like last week, this stock was touching 250. Was it not? Let's look here. November 10th, this stock's 250. It's lost 20% of its value like that, right? MU, great company. Memory demand is insanely high. Oh my gosh, it was even higher. Just on the November 17th. No way. November 17th, it was just a few days ago. That's crazy. Just in a few days, it's November 20th right now. So 3 days ago, 4 days, like what? That's insane that MU's lost that much value. Here's the thing you got to understand about MU. Memory demand is insane right now, and that's not going to stop. Nvidia needs all this memory, AMD needs all this memory, and like they're going to keep selling massive amounts of orders. And so like MU's in a sweet spot, but the stock had ran a lot. If we pull up a 1 year on MU, look at the 1 year on MU. It's up 107%. So when you make that sort of insane move, you're going to eventually be due for a big pullback. And that's exactly what we see now at this point in time in regards to MU. You look on a 1 month basis, it's only actually down 2%. It's just down off a cliff from where it was just a few trading days ago. That's insane, man. What a drop. Now, if we look out here, Palo Alto Network's getting hit a bit. AMD's another one that's gotten hit hard the past few trading days. Like, look at this. This is just since that November 17th as well. Down about 15%. Palantir is starting to really get hammered now at this point in time. Another telltale sign about this Nvidia situation, right? Because you looked at the Nvidia earnings and it's perfection, First off, shouldn't we all have expected perfection from Nvidia? We've got confirmation from every big tech company out there saying they're ordering as many of their chips as they can possibly get. No one should have expected anything other than perfection out of Nvidia. But another way you could have gotten a signal that the stock might go into trouble here in regards to Nvidia was look at Palantir. What happened with Palantir? Palantir reported a perfect quarter. They reported the rule of 40, they took it to what, 114% or whatever, like a number like it's just, we don't know if we've ever seen a company do numbers like this before. It's just ridiculous. Palantir reported perfection on perfection. And what does the stock have to show for it? The stock's down 23+% since those, right after those earnings. That's a little sign of like, hey, the market wants to go lower right now. Doesn't matter what you report. There's certain time periods, it doesn't matter what you report. You can report crap numbers. If the market's going up, your stock's going up. We watched that actually play out because the market bottomed Q4 2022 and then started moving up heavy. Big tech earnings were still trash actually at the beginning of 2023. They were not good. They were not good. But those stocks were already starting to move heavy because the market's like, it's time to move. We're moving up. Everything starts getting pushed up, right? And people start looking at it like a bottom and things are going to get better in the future. Right now, we have an opposite situation. It doesn't matter how good of numbers you report right now. The market wants to go lower. It's taking everything lower. Doesn't matter if you're Amazon. Doesn't matter how much you beat your earnings per share, your revenue, anything. If lower is where we're going, lower is where we're going short term, right? That just is what it is. And what do you have to do as a long-term investor in that situation? Absolutely nothing except buy. You hold, you buy, play that game. Don't play the game of trying to get out because you're like, well, the market wants to go lower. Nah. Because you're not going to know when to get out. You're not going to know when to get back in. You're going to get hit by taxes all over the place. You're going to be messed up mentally. No, you don't play that game, okay? Just understand that's part of the game. No different than if you play a game of basketball, right? The other team's going to score some points. That's fine. That's what happens. Like, you got to expect that. So if you're a long-term investor, like sometimes the market's just going to go lower, you hold through that and you buy. And whatever it's going to be, because you don't know when the bottom's going to be. The bottom could be today. It could be a week from now. It could be a month from now. It could be 2 months from now. It could be 6 months from now. It could be 12 months from now. You have no clue. And so don't try to think like, oh, I'm going to outsmart the market and get out and get back in and get back. No. Believe me. Some of the most intelligent people in the world have tried that and failed miserably again and again and again and again. Oracle. This is unbelievable what has happened to Oracle. Because we go back to that big announcement, the OpenAI announcement, right? If we look at that stock before the announcement came out, it's now down 4% since before the announcement. So basically, they're looking at this as like bad news. And that stock spikes massively, right? Spikes massively. And now since that time period, the stock's down 37.6%. Unbelievable. And this was a big OpenAI announcement they had. Like, that's incredible. Nvidia, obviously from where it was just a few weeks ago, it's down quite a bit. But on a 1 month, it's flat, right? On a 1 month, it's flat. Nothing crazy there. Stock's down about 14% from highs. So, Nvidia's gotten hit, but it hasn't gotten hit that hard, to be fair. Amazon, look at this. It has a massive spike on earnings. The earnings were amazing. AWS growth, whoa, we're back, baby. 20% plus revenue growth of AWS is back. And look at the stock since after those earnings, down 14%. It lost everything, right? Just gave it away. So Salesforce, a really hated stock in the market right now. Even if we pull up a 1 year on this one, look at that, down 30%. A year to date on this one, down 32%. Man, no one wants that one. Now let's go ahead and pull up my current stocks and positions here. And so if we look at my positions, I have actually a few that are green here today. Oh, the planet's green, that's funny. Tesla, which is my Tesla hedge, that one's green here today. By the way, let me say, when am I thinking about taking that Tesla hedge and cashing that for a profit? I think sooner rather than later in regards to that matter. I'm just trying to figure out, I kind of wanted to hold that into next year. But if this market keeps going down and a lot of these other stocks keep emerging as opportunities, that's $52,000 right now. If that keeps appreciating, next thing you know, it'll be 55, it'll be 60,000, 70,000. And at some point in time, I'm going to be like, I got to put that money into long positions in the public account, right? So yeah, and I do have some of that in some of my private portfolios as well. So, Tesla should be getting hit harder. That's the problem, though. That stock should be getting hit harder. It might be a lagger in terms of when it actually starts getting hit really hard, because I don't think the major damage has even come in Tesla yet. Estee Lauder's green, great turnaround play there. Shopify's hardly red. American Express is hardly red. So there's some stocks that are actually faring pretty well. Wynn Resorts is faring pretty well, right? Which this shows you. What does this show you? The main thing this shows you is today's sell-off is mainly tech fears, right? And growth stock fears. Because you're looking in to see some of these stocks like an Estee Lauder green, an American Express only down slightly, a Wynn Resorts, a resort company. Like if people were really worried about the economy, right? I think Estee Lauder would be down big today. I think American Express would be down big today. I think Wynn Resorts would be down big today. I think Revolve's only down 0.8%. Like I think Revolve would be down massively today. I think if people were really worried about the economy, Nike would be down huge today. It's down 1%. It's mainly, look at my worst stock today. It's self-explanatory. AMD, down 6% here today, right? There's just so much negativity really in the chip space right now and big tech and spending and all that good stuff, right? Now, let's pull up my possible buys watch list, which I need to rename this list. How do I rename this list? Let's see. Rename. There we go. No, not this list. I didn't want to rename this one. Oh, my gosh. I want to rename my possible buys. I need to make this 2026 possible buys. So there we go. All right, 2026 possible buys. Okay, so what do we have here for this list? So this is perfect. Bath and Body Works is going down like off a cliff. That's perfect. I want to start a position of that in 2026. Likely in January, so this is like the best case scenario I could possibly ask for in regards to Bath and Body Works. Keep going down all the way to Chinatown, baby. Like if that stock went down to $12, $14, I would not be mad. So this is like literally as good as it gets in regards to that matter. RH continues to get hit. I want to see that stock go under 100. Cava continues to get hit. I want to see that stock go under 40. Those are three stocks I'm looking at for 2026. Whirlpool's another one, but look at Whirlpool. Whirlpool holding strong today. Whirlpool's only down 0.1%. Oh, man. And that's with, like, that shows you there's not as much fear really about the economy. It's about big tech and about these chips and those sorts of things, right? So, but man, I love Bath & Body Works being down off a cliff here today. That is so perfect. But yeah, there's a lot of steel deals, and we'll go into my buys in just a moment. So housing stocks, some damage, but it's not that bad for housing stocks, right? Now, if we look at my potential hedges for 2025, Hood's down huge. Understandably, Hood's down huge. You have Bitcoin going down substantially, right? Additionally, listen, ladies and gentlemen, listen. When you have damage in the stock market, okay, it's very important everybody understands this. Some retail investors leave the market, and they don't come back for years. Okay, because they like, I lost $5,000, $10,000. Stock market's a scam. 20,000, 50,000, whatever the amount is, right? Stock market's a scam. So leave it for years. Some hold through, right, and make it out to the other side and go on to prosper over time. But the issue is a lot of those longer term investors, some of them are with Robinhood, but a lot of them are with like Fidelity Investments like myself, or with Charles Schwab, or with other like bigger platforms that aren't as focused on like trading and options and those sorts of things, right? And so Hood is usually one of the biggest beneficiaries when the stock market's going crazy, when Bitcoin's going crazy. And then they're actually one of the companies that get hit the most when Bitcoin's going down, when the stock market's going down, because people leave the market and like, this is a scam. You know, Bitcoin, I put it in at 100K and now it's 86K, like sell it, I'm leaving, you know, I'm done with this crap, right? And so then Robinhood's assets under management goes down substantially as a whole situation, right? And their business weakens considerably, and the business can go from unbelievable growth rates where people are like, oh my gosh, they're growing revenue at 40%, they're growing net income at 60%, whatever, right? To suddenly a year later, they're like, have flat numbers or down numbers. Like, what? How could this happen? Send the market down a bunch, and a bunch of people are going to dip on the market, right? Think it's a scam, and they're going to leave, and they're going to delete their Robinhood accounts and all that sort of stuff. Like, that's just what happens, right? And the strong survive. They make it out to the other side, and they make more money than they ever dreamt. We lost a lot of people in 2022, did we not? We lost a lot of people. You know why? The NASDAQ went down 37% from Q4 2021 peak to Q4 2022 bottom, 37% down. We lost So many investors. Well, I don't know if I could call them investors, traders, people that were in the market. It was like a ghost town, right? Complete ghost town. People are like, screw the stock market. It's a scam. Like, this is bad. And they all left at the worst time. They should have been buying that 2022, crash like nobody's business. Like, how often you get the NASDAQ go down 37% in a year? Like, that almost never happens. The only time I could think of that happening was the great financial crisis and the tech bubble pop. It almost never happens. So you're getting like a once in every 10, 15 year opportunity. You better take advantage. And what happened was people left the market in mass. And what happened to Robinhood's user base? Boop. What happened to Robinhood's revenue? Everything across the board, boop, 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 all went bad. So unfortunately, I wish it wasn't like that, but it is like that. So we could wish things were the other way, and it's like we wish like everybody stayed invested and bought these crashes and corrections that happen in the market, but a lot of times people don't. They dip, man. And it's sad, but it does happen, and you got to understand that for somebody like Robinhood, where all of a sudden their growth could slow substantially, and people are like, what happened? That's how it happened, right? Same thing with Coinbase, just they're obviously crypto exposed there, right? HIMS is a stock that, man, has that one gotten hit hard. Duolingo continues to get hammered. Those are retail trader type stocks, right? HIMS, Duolingo, even Hood, Coinbase. These are stocks like retail traders love, right? And they just continue to get damaged. And remember, margin went out of control, right? Margin's been out of control. If you've looked at the latest margin numbers, they're out of control. People, like 1.2 trillion or something insane with the latest reading from what I remember in regards to margin outstanding. As bad as it hurts, you gotta destroy everybody, so you destroy the margin. It's just what has to happen, because it never fails. Like, market keeps going up. Retail traders start going crazy on margin, right? Thinking it's only blue skies out ahead, and man, they set themselves up for a bad situation. Next thing you know, margin call, left and right. And then, everybody's liquidating their margin. Some people get really discouraged because they're on margin. Like, I was even reading a comment today. Somebody, I think it was on X, I was reading this, there's a lot of gamblers on X. Somebody's like, I'm so done with this market. Why did I even give it a chance? Because they played basically a bunch of short-term call options on Nvidia. And they're like, because they're like, earnings are going to be good, I'm going to play a bunch of call options. So they did that, right? And then they're crying because they lost all their money. And it's like, dude, everybody and their grandma knew Nvidia earnings were going to be amazing. The guidance was good. Everybody knew that. And the fact that you get noobs in the market that will play this game of like trying to gamble money on options, and it's like you don't even understand like base fundamentals of the market. How do you think this is going to end? Oh boy. It's unbelievable, man. It's unbelievable. But I'm not even shocked by it anymore. I've been on YouTube now for almost a decade, right? It started in 2016. I started posting. And I went to more stock market heavy in 2017. So, nearly a decade on this platform and on social media and seeing this stuff and the cycles. And it's just like, ugh, come on, man. Come on. Okay, so what are the stocks I bought here today? First off, why did I buy before we get into, the stocks I bought? If I think the NASDAQ is going to go down 10 to 15%, why would I step in and buy $40,000 plus of stocks today when the NASDAQ's only down 7.5%? And I think that's a fair question. Well, just because I think the NASDAQ's going to go down 10 to 15%, and that's what my intuition's telling me in my 17 years experience, that does not mean that's going to happen. Just because I think it's going to happen doesn't mean it's going to happen. The market could bottom today, next week, next month. Like, there's a million things that could happen. It could go down 50%. There's a million things that could happen. You can never bet on absolutes in the market. Never. You have to take a range of outcomes into consideration. And so under my range of outcomes here, there's a possibility that the market doesn't go down much further. And buying the stocks I bought today aren't going to go much lower, if at all lower from where they are, right? That's a possibility. And there's also a possibility it gets a lot worse. But the moral of the story is, if I see stocks at great prices, where I'm going to make a ton of money on these stocks over the next 4 to 5 years, I have to buy. And I bought a lot of stocks today that if we look out 2, 3, 4 years from now, I'm going to have made a ton of money in them. Will I make money in these stocks over the next 3 weeks? The next 3 months? I don't know. Who knows? Will I make a lot of money in these stocks that I bought today over the next 3 years? I think there's a pretty high probability of that. And so, okay, so what did I buy here today? Well, I posted this inside my private stock group today. I said since it's an abnormal big buy day in a private portfolio of mine, I figured I'd let you guys know. So, let's see. I bought 30 shares of Amazings on 218. A lot of fears around the depreciation. We're about to get into that subject, right? And I spoke about that extensively on the main channel last night and explained that subject, right? Amazon's not a stock I worry about in regards to depreciation because this has always been an asset-heavy business. Nothing's changing with Amazon. They're just asset-heavy. Like, that's what they've been. Their margins are low. Their net margins are trash. That's how it's been for the longest time, since the 90s. Like, that's how it's always been. And so I understand other people worrying that might own typically more asset-light businesses like Microsoft or Google or, just other companies in general that maybe are more asset-light, and even Meta, right, going more asset-heavy. I understand those people worrying about their margins and profitability in the future and things like that. Amazon, I'm not worried at all. Like, that's what this company's always been, asset-heavy, okay? Salesforce, I bought $4,000 worth of Salesforce here today. Great buying opportunity in my opinion. In regards to Salesforce, I understand it's a very hated stock right now. No one wants a piece of that stock, but man, it is just a steal deal in my opinion, an absolute steal deal in my opinion, and one of the best companies really in the market you could own over time. I understand the stock has sucked the last 5 years, but look at it the last 20 years. Look at it the last 25 years, right? If we look at Adobe, man, is that one undervalued. I love the acquisition they just completed, so I came in with a pretty big buy today of Adobe, almost $8,200 buy there. Celsius Holdings, that one's a steal deal, about a $4,000 buy there for Celsius. Got it just under $40 a share. Really the most attractive pricing we've seen on Celsius in quite a long time. Elf, another one, like this is the most attractive pricing we've gotten on Elf. And this is exactly what I would have expected from a lot of these stocks, right? Like Elf, Celsius, these sorts of stocks, right? I would have expected them to get hit again late in this year, just like they got hit early in the year. The thing is, I don't think any of these stocks are seeing the prices we saw earlier in the year when you had the big downdraft in the market. That's when Elf went to $49. Do I think Elf's going to $49? I don't. I just don't. Do I think Celsius in those lows was like, what, $24, $25, $22, I think it was. I think it actually got down to 19 or something like that. Do I think Celsius going to 20? I don't. I think Celsius, Elf, stocks like that are much closer to the bottom than they are to the top. And so, I think those stocks are probably within a few percentage of bottoming. That's my personal opinion. I could be wrong on that. Maybe Elf goes down to 49 where it was in, the April drama. Maybe Celsius goes down to $20. I don't think that's going to happen. I just don't see that happening. And so really regardless of what happens with the market here, that is what it is. So I think I'm getting close to the bottom on these as far as the bottom for the late year bottom, okay? Obviously the earlier bottom was, many months ago, back in April, you missed that one. Cheesecake Factory, well, some of you guys got that one. Cheesecake Factory 43 on this one. That one, I'm trying to remember where cake went to at the bottom of April. I can't even remember. There's so many stocks were moving so insane at that particular time. Cake got down to right around where we're actually at right now, right? And that's a sector just no one wants a piece of right now. Just everybody's been selling that sector nonstop. And so I'm here to step in and be like, give me, at the end of the day, we know the consumer numbers aren't going to be good in the short term, the very short term, like this quarter, they'll report in January. None of the consumer numbers are going to be good in the next 3 to 6 months. And the reason being is if you look at Target numbers, their revenues were down, right? If you look at all the restaurants, if you look at Starbucks, Chipotle, all those companies, like all their earnings were bad. Guidance wasn't good. Even a company like Cava. Nothing's good with the consumer right now. Bath and Body Works tanked off a cliff. They missed their revenue and EPS expectations. So the consumer, don't expect anything from the consumer in the next 3 to 6 months. I'm actually bullish on the consumer as we get through 2026. I think the big beautiful bill helps out. I think if they do those stimulus checks out will help out. I think the lack of inflation is going to really help out in regards to a lot of those sorts of matters. And so we'll see how much actually gets passed on to the consumer in regards to the whole tariff situation. But the moral of the story is here, that's a great deal. Like, I don't know what else to say. Like, that's just a great deal. Like, I'm like, give me cake at this price. Like, I love cake at 43. Like, come on, man. Thank you very much. AMD, this might surprise some people because I already have AMD as such a big position in different portfolios. Like, I own well over seven figures of AMD stock. I don't even think I've ever disclosed that before, but it's a lot. I mean, I don't think people understand how many AMD shares I was buying the first 6 months of this year. I was loading the boat. That's another one of those stocks. Like, this is kind of what I expected. Like, AMD wasn't going to just go straight to the moon. Like, you were going to get hit short term, right? Before we start the next big cycle up. And the next big cycle is going to take AMD to, that 325 level, in my opinion. And so, short term pain. Is that stock going back to $80 where it was in April? Absolutely not. It's not even getting anywhere remotely close to that. And so, AMD, you understand, we haven't even started the party yet on AMD. I understand the stock price party has started, but the real party hasn't even started with AMD. The real party for AMD starts in the second half of next year when the 450 series goes into production. That's a chip everybody wants. That's when AMD's revenues explode higher. That's when their margins explode higher, when their profitability explodes higher. That's when the real party starts. Like, we're just setting up for the party right now. Like, we're just getting the drinks ready. The bartender's just getting everything ready. The party hasn't, I hope everybody understands that, and that's going to be a multi-year party. Like, we're going to party in 26, 27, 28, and then the party will be over eventually. Maybe that's 29, maybe that's 2030. And when I say over, it doesn't mean AMD's done as a company at that point in time. It's just like that insane growth cycle we're going to go through starting in the second half of next year. I mean, we've already started a major growth cycle, right? The growth rates have already started to skyrocket. It's just we're going to take it to another level that I don't think anybody's prepared for starting in the second half of next year. And that's when, man, woo-wee, we're going to have some fun, baby. Okay, so let's talk about some serious subjects here. If we didn't already talk about enough serious subjects, let's talk about the depreciation situation, which is very serious. And let's talk about Dalio.
Are actually useful, adding some fuel to those bubble fears. Nvidia's CFO weighed in on that last night, saying that chips they shipped 6 years ago are
963 we're up to
today.
963
it's a good topic for
ready for the sale.
Today's Tech Check.
Hey, comment, baby.
Hey, good morning, Carl. So that's right. CFO Colette Kress, she tried to put the depreciation debate to bed, but she may have actually raised even bigger questions. She essentially said that Nvidia chips, they last longer than most people assume, 6 years, and still at full utilization thanks to its CUDA software. But what does full utilization actually mean? Running isn't the same as creating economic value, and that is where Michael Burry comes back in, throwing cold water on the whole idea. He posted on X that extending useful life confuses physical utilization with value creation. He likens the A100 chips to airlines that keep old planes around for holiday overflow. Yes, they fly and they're full, but they're only marginally profitable, and they're not worth very much at all. Now, Jensen Huang has basically admitted this. He said last March that you can keep old GPUs working, but they become almost impossible to sell once the next model shows up. This was at GTC. He said that Blackwell, its latest generation, is so much more powerful than Hopper, the previous generation, that, quote, you couldn't give Hoppers away. He said there's only a few circumstances where they're even fine. That's the word he used, fine. Now, in the current moment where supply is tight, old chips, they will get used. But if that imbalance changes, and this is sort of the question on everyone's minds, does that value drop very quickly as well? The risk for investors is this uncertainty. If you do not know how long these chips stay economically valuable, you cannot properly model capex or margins. You can't model the AI cycle with confidence. Meanwhile, guys, I know we talked about Google's TPUs yesterday as a longer-term alternative to NVIDIA GPUs. If the market is struggling to understand the economic life of NVIDIA hardware, Google's bet is just to build its own. It just dropped Nano Banana Pro this morning, its new image model, powered by Gemini 3, which runs on TPUs, not GPU infrastructure. Investors, they continue to pile into this trade, this vertical integration story. Google shares still up nearly 1% today as the tech trade overall sort of softens.
Yeah, that's a great example. But you're right, the conversation's not going away. It's definitely feeding the short discussion. And that's not even mentioning some of the innovation that we're getting out of the likes of China, which continue to be just a series of like deep-seek echoes, although not as noticed now.
One of my favorite topics and biggest questions amid all of this, how do the Chinese get away with spending like so much less than American model builders. I mean, it's like a 9-to-1 ratio. We're spending on GPUs, on all of this infrastructure, and the Chinese are able to create comparable open source models, in some cases beating on some benchmarks. How does that all sort of pan out? And that's another bigger question for sort of the bubble anxieties that I think is only going to get louder and raises questions also about the GPU usage.
For sure. Deirdre, thank you. Deirdre Bosa on Tech Check today.
Yeah, and so how do you look at something like that, what we just heard there, from the perspective of Nvidia and also the perspective of all these big tech companies, especially around the talk of, you know, these chips are only really super useful for the first 2 years and China's being able to do this stuff for much cheaper. How do you look at all this? First, from Nvidia's perspective, big risk, right? If these big tech companies over the next couple of years are able to find ways to do what they need to do for cheaper, it's a risk for Nvidia, right? Part of that's going to be using AMD. AMD is not nearly as high margin as Nvidia is, and so AMD is going to be undercutting Nvidia's price points, right? That's a big risk. And Nvidia hasn't even had to face that risk. They just finally start to face that risk in the second half of next year. Additionally, if just in general, like these companies find more efficient ways, and that means they don't need to place as big of orders for Nvidia chips in 2027, 2028, right? Which is a big risk. So it's a big risk to Nvidia, and it should be taken very, very serious. What about for the big tech companies? The way I look at this, nothing but opportunity. Because there's a high probability, these companies have a lot of very intelligent people working for them, right? Very high probability, over the next year to year and a half, they're going to find ways to do what they need to do for cheaper, right? And so I think these companies could start flatlining their CapEx or maybe even slightly bringing down CapEx in 2027, 2028. I don't think these companies are going to have massive increases in 27, 28. I think they'll have decent increases again in 26, but I don't think they're going to be skyrocketing that CapEx in any major way in 27, 28. One, they can't afford it. They can't afford it. They're already going to be spending so much more in 26 and 25, which their numbers are already insane. And a lot of these companies are now spending more in a quarter than they make in profits. So it's totally not sustainable for them to spend aggressively 27, 28. And, you know, we always make fun of the Chinese for copying American companies. This might be a situation of the American companies actually copy the Chinese and be like, hey, you guys doing that for so cheap over there, right? And so something to keep in mind there, and it's a big risk for Nvidia, but it's a big opportunity for the big tech companies because they can't be dealing with all this depreciation. Ray Dalio.
Morning to you, sir.
Morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at Nvidia this morning, and I think
before we go further here, let me just say this for anybody that's not aware of Ray Dalio, right? Obviously, legendary investor over time at the Bridgewater Fund, but I will say this. Ray Dalio's leaned very, very bearish for years. For years, okay? So just understand, when he sounds bearish, the man, it's not like this is some new thing. He's like, if you've been following Ray Dalio the last 5, 7, 10 years, like, man's sound is so bearish over the years.
Waking up thinking, where's the market headed next, has been this question of an AI bubble. And curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in markets. Bubbles, what is a bubble? Right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion, or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money. So it's a matter of who the buyers and sellers are. For example, if we had a wealth tax,
right,
or if you had a tightening of monetary policy, then there has to be the selling of those assets. So in order to pay those things. So there's a mechanics of who owns it, is it over-owned, and so on. It's not the long-term duration of the earnings. So you think about it, isn't it interesting that we have such a short-term reaction? It's great that what the results are, but this is it's valued as a long-duration asset. So for 25 years, the next 25 years, it's very unknown. We don't know what's going to happen. And bubbles don't happen because of good estimates of what in the future. It happens because...
To push back against Ray Dalio, Nvidia's stock is not valued on what they're going to be bringing in for earnings over the next 25 years. No stock in the market is. People are thinking about it in the context of what is this company going to be bringing in over the next few years, right? And what am I paying for that? And is this business model sustainable over the longer term, right? And with Nvidia, there's like a question. It's like, okay, there's this insane demand short term for their chips, right? We know that. Is there still going to be this insane demand? Are they going to be able to get these sorts of price points 5 years from now, 10 years from now? That's a question, right? And, I can't even confidently say one way or another. So that's a fair question.
Of the need for cash. Do you sell that asset? Do you have to sell that asset for cash for some reason?
Well, that's the question, though.
So your book, I thought, did such a good example. I mean, I thought, by the way, your book is fabulous.
Oh, thank you.
But you take the 1929, and then you say, what made it go up and what made it go down? And that dynamic is the way bubbles work, right? And so if you take who has exposures, how much leverage is used, and so on, this is about 80% into a bubble that was 100% would have been 1929 and 2000.
So how much leverage do you think is supporting all of this? Because we were talking to Partsenevelis in the last hour, and she was explaining this idea that Jensen Huang doesn't see a lot of the transactions that he's been doing. We've talked about these circular transactions where he's effectively taking an equity stake in some business, and that business is then committing to buy his chips, if you will.
Yeah.
A form of vendor financing with sort of a equity overlay, maybe, is the way to think about it. Do you look at that and say that's a problem? It's not a problem? Should we think about vendor financing in a different way? That was something that got a lot of the fiber guys in trouble in the late 90s, for example.
Yeah, I think it's an issue, but I don't think it's the main issue. I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble and we're talking about for the economy bubble? So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it and in a leveraged way. In various ways, it has leverage.
What are strong hands? How would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is that they primarily invest their own money. You don't have public, right? The weak hands is largely, let's say, a leveraged public. And all united about that. That's one of the key ingredients of a bubble. Right. So it's not just pricing, because we have to find out. Your book did such a great job of looking at the wonderful companies.
Real quick here, I think I got to push back against Ray Dalio again. I think this is very important to say this. Okay, listen. You have the public, retail investors, that you have a segment that is typical. You would put those people into that category. Gamblers, don't know what they're doing, weak hands, blah, 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 right? But nowadays, you have a very strong group of long-term investors that are actually putting in the work, doing the research, right? Running their numbers, using 1000xstocks.com to run their projections, all that good stuff, right? And they're two very different groups. And so I don't want us to all to group like all a retail. I'm a retail investor, right? Been in this game 17 years. I do all my research, do all my work, made insane money over the years, right? Became obviously very lucky to join the 1%, okay? Did all that stuff. Beautiful. From a kid cleaning dishes in the back of Einstein Bagels to what we are at now, right? Great. I'm a segment, okay? And there's another segment of people that don't know what they're doing. They don't put any work. They're just gambling money around. They're just throwing money, whatever, right? They're margining out. They're doing just silly stuff. They're playing Nvidia call options because Nvidia's earnings are going to be good. So that means the stock's going to explode higher, right? All that good stuff. So let's not put those two groups together. It used to be just everybody was in that group, but now it's a very different group. A lot of you guys, you don't really care about where the stock market's going over the next 3 weeks, 3 months. It's all entertaining to you, right? It's interesting, but like you're not placing bets on this, on that. You're thinking about these companies over the next several years. You're what I would call strong hands, and actually much stronger hands than actually most of Wall Street. So, and no different than Wall Street. Wall Street, there's a segment of Wall Street, and it's a huge segment, not very intelligent. Not very intelligent. They're some of the weakest hands. They follow each other around like little sheep, man. We're going this way. Oh, we're selling this stock now. Oh, we're buying this stock now. Oh, Nvidia's the hot play. Let's buy Nvidia. Oh, Palantir's a hot play. Let's buy Palantir. Oh, now they're not the hot ones. Let's sell those. Like, they're a bunch of sheep on Wall Street. They're clueless on how to actually value companies and how to play this game on a high level and understand business models and things like that. And there's a segment of Wall Street that's very intelligent, and they're very in the know. And they are very understanding when the market's going to go up, when it's going to go down, when certain stocks are going to go higher, where certain companies are going to get their earnings from over the coming years. So, in life, you got to understand not everybody's created equal. It's just the bottom line. Like you think like, oh, everybody's the same intelligent, everybody's this. No, it's just not the way it works. Some surgeons are way better than other surgeons. I hate to break the news to you. Some dentists are way better than other dentists. You might think they're all the same. They're not. Some doctors are way better than other doctors. You might think they're all the same. They're not. Some lawyers are unbelievably great. Some lawyers are horrible. You get what you pay for in life, right? Some cars are unbelievable. So amazing. Some cars really suck, right? That's life. That's life. And so when we're talking about retail investors, let's not coin them all up to weak hands. They don't know what they're doing. There's a big segment of that, but there's a big segment of highly intelligent, like some of the retail investors you'll find are some of the most intelligent people in regards to the market and understanding this stuff on a high level that you'll find in the world. Like way more intelligent than people you'll find even running big hedge funds that have billions of dollars of assets under management. Like you'll find some random guy in Iowa who's 10 times more in the know than some hedge fund manager that's got a fancy office, right by Central Park or something like that. Like, that's just the way it is, man. So don't group everybody together. There's differences, big differences.
The 1920s. And then it enumerated how electricity came out, right, and General Electric and RCA and so on. And those companies went down 90%, not because of the economy and so on. The bubble burst first because they needed cash. So you have to understand that wealth can't be spent. In order to get money, you have to sell wealth in order to get cash to get the money to buy things. And so when that happens, bubbles burst. So bubble bursting means, let's say, a tightening of monetary policy is classic, but also something like wealth taxes can happen. Mm-hmm. For example, think about wealth taxes forcing sales of assets that you have to.
And you're right. By the way, there's a proposal for a wealth tax in California right now.
Yeah, so state and national, right? State and national. I'm just trying to describe the mechanics of a bubble.
But you said we're at 80%.
Yes, I have a bubble indicator that goes back to 1900. And it just has a number of indicators. How much leveraging? Who has the leveraging? Is it, what is the amount of money in wealth that relative to the amount of cash that needs to exist and so on? These indicators, there are a number of them, show that we're on that chart. If I was to show you the chart, it's about 80% of where it was in those two times. That doesn't mean that that's the end of the move, okay? Because bubbles have to be pricked.
Right.
And so you can measure that there's vulnerability, a lot of vulnerability. There's a lot of vulnerability of who's holding what.
Here's my question to you about that, which is if the bubble is at this 80% range on your index or metric, there are folks, we had Paul Tudor Jones come in here a couple weeks ago, and he said, look, I think we're in October of 1999. By the way, the market would still have 40% to go. Back in 1928, Charles Merrill, who founded Merrill Lynch, told everybody, get out of the market because he thought it was a bubble. And he was right and he was wrong insofar as from the beginning of 1928 to September of 1929, stock market went up 90%. And so...
But I think that when...
I hate this discussion. I hate it. When we start bringing things back to such an unsophisticated market of 1929, like people didn't even know anything about the market back then. Like you want to talk about gambling on the highest level, like people were taking out 10 to 1, 100 to 1 margin, just throwing it out there on stocks, and no one even, there was no conception of like what a P/E ratio is back then, or like the market is a billion times more sophisticated than it was back then. So like I hate when we bring it back to the Great Depression. I'm like, dude, that was a whole different economy. That was a whole different like amount of wealth in the world at that time. Like that was, you can't even compare it. You know, it's just ridiculous, man. It's just ridiculous. Like why don't we compare it to, you know, something that happens, you know, 5,000 years ago? Like it's ridiculous. So I hate when they bring this up and it's like, dude, like no.
Looking at that, you're looking at it incorrectly. Okay. What is a bubble is the definition, right? I want to reiterate, a lot can go up before the bubble bursts. A bubble is an unsustained set of circumstances. It has unsustained amount of buying.
Right.
It has an unsustained amount of valuation. It has, and then there's something that pricks the bubble.
Is there a way to sustain this, though?
You can't look at, don't sell just because there's a bubble. Okay? Don't sell just because of a bubble. But if you look at the correlations with the next 10 years returns, when you are in that territory, you get very low returns.
By the way, JP Morgan just did a report on this that showed that if you got in at over a 23 PE multiple, typically over a 10-year period, your return is a delta between 2% and minus 2% a year over 10 years.
Yes.
Which gets to your point.
I just put out today a post on this, and you'll see the charts and if you go on that. So I think that you have to say it's unsustainable. Then you have to go to the timing. What is it that pricks the bubble, right? Mm-hmm. Typically a tightening of monetary policy. We're not going to have that now.
Okay.
Right? Mm-hmm. But you could have something. In other words, the need for cash.
Right.
The need for cash is always that which pricks the bubble. Because when you have wealth, you can't spend wealth.
Right.
You have to sell wealth in order to get the money to buy the things you need or pay the bills you have. That's the dumb. Right. So I think that the picture is pretty clear in that we are in that territory of a bubble. We are in that bubble territory, but we don't have the pricking of the bubble yet.
So it's important everybody understands the decade we're in right now. Because basically what can happen in the stock market is you kind of get like I call it an on-off decade in regards to things being really crazy in the market versus not very crazy in the market. And when I say very crazy in the market, I'm talking like you get massive drops in the market randomly, okay? So for instance, 1980s, insanely volatile, right? Like the 1980s was crazy in the stock market. 1990s, not nearly as volatile. 1990s mostly just upward moves, right? There's some downward moves here and there, but 1990 is just chilling, like make a lot of money, like have fun, right? Now, 2000, 2009, extreme volatility. You had the tech bubble popping, right? Obviously, there was a lot of wars during the 2000 to 2009 timeframe. Obviously you had 9/11 during that time period. You had the great financial crisis. So 2000, 2009 was crazy, right? Didn't mean there wasn't money to be made in the market. You could have made a lot of money if you knew where to invest properly, right? But that was crazy. Then we had 2010 to 2019, chilling. Like, we're sure we had some drama here and there. We had the 2018 drop at the end of the year, right? We had the double dip recession fears of that was around 2010, 2011. We had some drama here and there. 2015 got a little crazy in the summer. Nothing, it was mostly just chilling, make a lot of money, right? 2020 through 2029, crazy. We're in a decade right now of just craziness. There's going to be massive moves down, massive moves up. There's going to be a lot of money to be made if you know what stocks to invest into. But it's a crazy decade we're in right now. And you got to understand that. That's where we're at, right? And so 2030 through 2039, I wouldn't be surprised if that's chilling. feet up, like just, not a lot of drama. So you better enjoy this decade we're in right now, because this is one of the crazier ones you'll get in regards to moves up, moves down, and you've already seen it. We had the 2020 insanity, right? That Rona crash was extreme. Like that was a straight V. Like it was straight crashed around, straight up from there, right? Then we had 2022 where the NASDAQ dropped 37%, insane. Then we have this year, which we had that unbelievable drop at the beginning of the year in March and April, right? And the NASDAQ went down around 20% there. And then now we got this drama, right? We're in a crazy decade. You got to understand that. And you got to just, like that's what it's going to be. We're going to have some time periods when things look really bleak and like just everybody's depressed on the market and like we're never going to make money. And there's other time periods that it's going to be just like, how did we make this much money this fast? And like I showed the public count. Public count's been crazy over this past year. Like a year ago today, it was like $2.7 million, right? Fast forward to like February of 2025, it went up to like 3.1 or $3.2 million. Then it crashes down in the April situation, right? All the way down to $2.5 million. Then it goes from 2.5 million in April at those April lows all the way up to where it was last month at the peak, which was like around $4.2 million. And now it's crashed back down to 3.5, which is still up in like $1 million from where we were in April for the public count, right? And still up massively from where we started this year at, right? And then it's still up massively from where we were a year ago. Like 3.5 is a lot bigger number than 2.7, right? And that's with minimal deposits, because I only put like, I think it was like $500 a week in that account. So it's basically like nothing, for a portfolio that size. So we're just in a crazy decade, and you got to understand that. Take advantage of it, man, because I can tell you, the next decade might not be like this. It might just be chilling, making money. But this is where you actually get many of the best opportunities, okay? Speaking about the best opportunity out there, the Black Friday sale is coming. Pin comment down there. Let's see how many are ready for that. 966 people are signed up for the sale. I'm sure we'll be at 2,000 plus. Make sure every single person watching this, make sure you get advantage of that. Take advantage of that deal. That's going to be unbelievable for the entire software suite, for the education portion. A lot of you guys need that as well. And once again, we're going to have a deal for 50% off a monthly membership and 50% off a 3-year membership. So regardless if you just want to join on a short-term basis and pay month to month, or whether you want to get the ultimate deal and just join for a longer-term basis, it's going to be amazing. So that will be pinned comment down there. Make sure you take advantage. Much love and have a great day.